price of Bitcoin has gone through the roof, but is Bitcoin just a speculative asset, or does it tell us something about the future of money? And could it be an alternative to money? Well, joining us to discuss this is Rob Price, who is a macro strategist and investor based in Los Angeles. Rob, could you give us an indication of what this Bitcoin surge tells us about money in general, and help us to also understand the nature of money itself?
So thanks, David. It's great to be here with you. And I think the answer to the question is a little bit of both. And to understand the question properly, we really need to dig into the understanding of money. What is a good bad money? What is a bad money? And how do monies come about on the market? If you look back in history, money is a good which was chosen on the market. Was often in societies the most tradable good, and depending on which societies you were in, different goods were chosen. People chose things as seemingly obscure as salt and beads, and cattle has been used as money, and even in concentration camps in the Second World War, people used cigarettes as money, because in each of these markets, those goods did serve the purpose of money, depending on the constraints in that market at the time. And the broad kind of characteristics that we're looking at money are things like, is it durable? Does it last? Is it divisible? Can we break it down into smaller amounts? Is it portable? Can we move it around? And quite importantly, is it scarce? And over time, and as I said, I've mentioned a few of the more obscure historical examples, but markets tended to gravitate towards metals as money because they fulfilled a lot of these purposes better. And gold in particular, and precious metals were scarcer than the others, and so they formed as a good money. So that gives us, I guess, a good basis for understanding our current money, and the characteristics that new forms of money could provide, and how they kind of fare on these characteristics.
So Rob, on your website Sound Money Macro, you wrote an article recently where you warned about the dangers of unsound money. Could you help our viewers to understand this concept of unsound money?
Sure. So coming back to our characteristics, one of the important ones that we talked about there is scarcity. So unsound money is basically money and a monetary system, because of course the monetary system kind of oversees the amount of money that is created and the management of that money through the central bank and the fiscal authorities and all the other kind of tentacles into the rest of the economy. But an unsound money is basically a money where the constraints on the growth in the quantum of that money are very limited, and so that in that society you get large growth in the quantity of money. And I think it's important to note, of course, that there's a big difference between growth in the quantity of money and wealth and capital. That's not the same thing. And a good example, you can look in the US in 2020, the quantity of money grew dramatically through 2020 as the authorities just created this money out of thin air and tried to plug holes in the financial markets and the economy. But of course, the actual wealth in the society didn't improve during 2020. So I'm just trying to make that distinction between the quantity of money and actual capital and wealth. Those are two different points. But yes, an unsound monetary system is one where one is able to do that, where policymakers and banks and originators of debt are able to create new money very easily. And as I've said, there are consequences to this action.
So Rob, what are the consequences and the negative effects of unsound money?
Yeah, so the consequences are numerous, and they're sometimes a little bit abstract, so they can be difficult to see. So the authorities will argue to you that the only consequences of expanding money is CPI inflation, and that's something that we've spoken about in a previous video together. And the argument that I would make is that's not true. There are numerous consequences to expanding the quantity of money, because basically what you're doing is you're distorting the price mechanism in the economy. Remember, money is half of every single transaction that we conduct. So the impacting the money has a big impact in the economy. And going back to another historical example, I mean, the Roman Empire was undermined over a few hundred years by large expansion in money in Rome. Of course, at that time they were still using metal money, but what they did is they would clip away the content of gold and silver in those coins, effectively creating monetary inflation. And so, just getting into a couple of examples. As I said, I think there are numerous different examples, but one is, of course, when you create this new money, you're basically diluting the shareholders of that money. In South Africa, if there's lots of new rands created, then all the existing shareholders of rand now hold, relatively speaking, less. And of course, you can make the argument in any economy. So there is a what we call a Cantillon impact, which is basically an inequality impact. So the people who get their hands on the money first get the positive impact of that new money, and everybody else doesn't. So it should be no surprise when you look around the world today that you see much bigger governments in most countries. You see big corporations that are kind of benefiting from these policies. And I think it's important to distinguish that there's not some sort of nefarious cause that is trying to create these outcomes. I think just sometimes policymakers don't think through all the steps and the consequences of what they're causing. But yeah, just to summarize, I think one of the most important is this unequal impact. All this creation of money dilutes the existing shareholders and benefits those people who get their hands on the money first. And just a couple of other quick ones is, of course, when you create all this new money, new debt, economies become saturated with debt. And once again, if you look around the world today, in most countries, debt to GDP ratios amongst governments are at their record highs. And it's a similar, characteristic if you're looking at households or corporates. And that implies that economies are saturated with debt. When you're saturated with debt, that often implies that inefficient businesses are staying in business when they should be out of business. So as a result, our productivity and our efficiency is not as good as it should be. That impacts growth rates, that impacts the social mobility opportunities. So I think this, it actually ties into a lot of the economic frustration that we see in the world today, that is now finding expression in all sorts of strange political events. And if you think about it and you work through the steps, I think a lot of this is actually related to the unsoundness of our monetary system and the distortions that it's having in the economy.
So Rob, the opposite of unsound money is sound money. So does Bitcoin represent any of those characteristics? Does it have the makings of sound money and an alternative to the current system?
Well, exactly. So sound money is a monetary system where there's constraints on the growth in supply of that currency, or that money. And that's exactly the way that Bitcoin was created in 2009 in response to the global financial crisis and the bailouts that we were seeing of the banks in the UK and the US at the time. And so Bitcoin is a digital constrained supply asset, which is actually a phenomenal invention if you just think about the fact that we've created digital scarcity. Well, not we, I mean, Satoshi Nakamoto, or he, she, or whoever they are, they created digital scarcity. And that's an incredible invention. But yes, it is a scarce asset. So as a result, it is trying to compete as a form of money. And of course, it is in stark contrast. Its scarcity is in stark contrast to the large growth that we're seeing in money supply in most economies around the world. And so coming back to our characteristics of money, it is a defining feature of Bitcoin. And so when one thinks about whether Bitcoin is a speculative asset or an alternative form of money, one really just needs to dig below the surface and assess these monies on these characteristics. And when one does that, one starts to get a very interesting, very interesting answers.
All right, Rob. Well, thank you very much. We'll also link to our earlier discussion on inflation, which I think is very relevant to this discussion as well. That's it from me, David Ansara. Please remember to like this video and subscribe to the channel. And also check out our finance and economics playlist, which we'll link to as well. Until next time, take care.